Hi guys, it is 9 p.m. So I think it's time to start the space. We'll wait. I don't think we'll wait for any more people. They'll filter in and out. So we wanted to do this particular space on curve fitting. There's been a lot of comments on what curve fitting means. People share strategy results online all the time these days, and more often than not, this fancy term is used for as a comment against some of those strategy results, saying, "Hey, boss, this looks curve fitted." Um, we've seen um, a lot of strategy results which come from the famous or infamous 920 straddle strategy, and whether or not they are curve fits, what does it actually mean to be curve fitted? These are things that we are going to discuss in today's space. We have um, Pawan Thakur. Pawan, hi Pawan, how's it going, man? Awesome that you could make it to the space.
All good, man. How are you?
Awesome, good man, good, thanks. So we haven't actually spoken before. My name is Raghav. I'm one of the co-founders of AlgoTest, and I think so. I was actually introduced to you back in the day when I think Ashish Gupta had done one particular space on his mission in life, which is Furuz, and you were a speaker
Yeah,
there, and
yeah, yeah.
so yeah, you were a speaker there, and I quite enjoyed what you had, what you said. So that's actually how I first heard of you. We would be interested, I think, to start off with understanding, what is your trading style? What kind of trades do you take? What kind of strategies do you have deployed? If you could just start with that, start with like a brief intro, and then with the kind of trading you do, how you got into trading, etc. That would be a good starting point.
Yeah, I mean, see how I got in trading is like a long ass thing. So let's keep it to, what I run right now. So since past year, I pretty much moved to almost like pretty much fully automated systems. And it was like it's been some journey, like past year. But as of now, I mean, I've always been like trading direction for the most part of my journey with, discretionary techniques that I used to use. So pretty much automated along the same lines. So most of the systems are trend following, added overnight positions, same, but I trade them in different way. Those signals are automated. I still manually punch the orders for the positionals. So that and some intraday, a couple of intraday selling systems. So these three automation and one kind of like, I have to manually punch the orders. That's all I trade right now. I only trade index options, Nifty long only, but pretty much most of the rest is around Bank Nifty index option. That's about it.
Got it. That's interesting. Is there a reason why you why you get the signal through a system, but you still manually punch the orders? What's the reasoning behind that?
Yeah, so there is a slight limitation that I have there. So I have pretty much coded since day one. I've coded everything with Zerodha's API. Now I'm already running two systems. One is intraday and selling and buying, right? It's kind of becomes difficult to differentiate. Now you know that we only have two types of orders, MIS and NRML. So I use those order types to differentiate in between two strategies. Now when I have to, take positional trades, it kind of messes it up. So I have to wait till 3:15 once everything goes off. Then I just punch those orders manually, and that's the only reason. I do have plans to, I mean, I do have a corporate IFL account, but I have not never coded with XTS API or anything. So it's something long due, but yeah, once ideally I want to move these two things separately. So, there's no conflicts going forward, but just as a safety measure, I do it the way I do it right now.
Interesting, interesting. Yeah, thanks for that. Maybe at some point, we have built execution platforms before, and we actually have an execution platform right now. So, maybe Chintan, who's also the co-host here, he's been shown as Jaggi. He can get on a call with you and see maybe we can have an out-of-the-box software solution to actually solve this problem of yours. Um,
Sure, sure. Happy to discuss. Yep.
Yeah, I'll DM
Awesome,
you.
awesome, awesome. So yeah, the second speaker we have here is Yash. Just unmute yourself, Yash,
Yeah,
and it
hi.
would be awesome if you could. Hi, hi.
Yeah,
It would
hi,
be
hi, hi.
awesome if
Hi,
you could.
everyone. Hi, Pawan sir. Hi, Jaggi sir.
Hello, sir.
So just give us an intro, bro. Like what kind of what got you into trading? If you want to talk about that, what kind of What kind of strategies do you run? How much of it is systematic, discretionary? I mean, the field is yours. Go ahead.
So what got me into trading was actually I wanted to pursue industrial designing, and this is year 2016, wherein I went to my broker, that was Zuari Finserv, and I asked him ki I want to make such amount, मतलब 45 lakh rupees, to basically go to pursue this industrial design, and he told me it is possible, and I was having only 1.25 lakh rupee capital deposited over there, and he said it is possible to me, and I trusted him, and I ended up giving some 72,000 rupees in brokerage, and lost a lot of amount, and then the learning curve began. In 2018, I came across this margin.de software that was meant to trade crypto. Okay, so I then, well, curiosity came to basically create this of my own. So then I came across this Quantity EPAT, and then kept on pursuing that, and then I came across Vihan sir's EPAT. I mean, sorry, this Amadeus. Okay, then after that, learned backtesting, the execution, and was deployed on matlab, fully algorithmically in July of 21. So since then, the journey is on, and yeah, and I'm into basically trading. I mean, most of my systems are basically trending. So, and I do on the both buy and the sell side. Yeah, that's a bit about me.
Nice. So we have both natively Pawan and Yash are trend followers, and I think Pawan has mentioned now that he has some intraday option selling strategies. But that's interesting, right? Because we what is in vogue here, and that is something that we've also tried to capture is non-directional with a directional bend, with a trendy bend, which is what the 920 straddle is famous for. Um, but yeah, I think there's certainly a lot of room here in this conversation and in subsequent conversations between Pawan and Yash and ourselves to talk a little bit more about systems, the kind of systems that they have, which are trend following systems, and depending on how much obviously they want to reveal, but it would be awesome to have some kind of like an educational conversation on that as well at some point in the future. So what we'll do now is, we'll start with our topic, which is curve fitting. What does it mean for a strategy to be curve fitted? Other words, like I mentioned before, overly optimized strategy hai. Um, so what does it mean? Like, I guess I'll give Pawan the mic. Like, what does it mean, Pawan? Yeah, when somebody says that a strategy is curve fitted.
See, I'll explain with an example because knowingly, unknowingly, many people when they are starting with the testing strategies, be it any platform, unknowingly this is the desired nature. Like when you find something, you get an idea, you test it, and you end up with your results like, okay, I have 65% accuracy on this one, win rate is this much, this is my drawdown or whatever. And for some reason, like you like the idea, you want to trade it, but the numbers are not making sense. So the general response to that is you start tweaking the any of the variables, or maybe even add more variables to that existing system or the idea, and then you try to filter that result out. And with every change, every tweak you make, you end up with a better backtest result, and suddenly that 65% win rate might even go to 85. You can fix the back maximum drawdown and all those things. But what happens when you deploy something like that? I think if you go somewhere around mid-August, I posted an equity curve of one of the systems that I ran, and it literally did so well, and then gave up everything in next 6 months because it was nearly overfitted to the conditions that we had, like back in second half of 21. So I posted that. I'm not very proud of it, but yeah, that is the truth. I scrapped it. I changed it this year, and it didn't start like that. I mean, initially it was not that bad, but once the things started to move, I kept on just fitting that. And that's what I mean, like you get in strategy at some point, it becomes like it's not every system is tradable. Like if you take a very basic idea and just let's say you start buying 10 days high and keep holding until a 10-day low is broken on any index, even that thing will make money in the longer run. But it'll have a huge time drawdown. So what people do is like they pick up average ideas. I'm the same. And then you don't want to give up on that idea because not everyone is a good system builder or whatever. So you want to just hold on to that idea and optimize it. And it's not a thin line. I mean, it's common sense. Like you can optimize a system while being sane, but if you keep on playing with the variables and keep on that tuning it, at after a point it will look very very nice on the backtest, because of course the data is fixed, so you can do whatever and bring out whatever results you want. But when you go and deploy such systems, sooner or later you're gonna fall on your face.
Really, really interesting, um, like well detailed introduction with a personal example of having a curve fitted system and trading a curve fitted system and losing money as a result of trying to trade that curve fitted system. So that's pretty cool. A couple of things that you mentioned here, one is sort of the addition of new parameters and over tuning of those parameters. Could you talk a little bit more on that? Like, what is the tendency for us to do that? Like, you started with a 60% accuracy system, and then you said that um, there was an addition of parameters and over tuning of parameters. If you could help the audience understand a bit more what you meant by that.
Okay, so I'll tell you what I was doing. So because I'm coming from market profile is something that I used to trade manually, right? So when I wanted to automate, there was no scene of backtesting. Like I didn't even know like proper backtesting, how to backtest or anything about the backtesting matrices, because all I thought was if I can make money with my hand trading market profile, there are some setups which we call bread and butter setups, like trading rotations, and open drive is like one of the main setups. So I thought if I can even just automate open drive, because many times the prices are moving so wild, and those are the days when you get paid so well. So I found it difficult to pull the trigger with size. So I thought my only goal was to automate. Okay. But when I tested the textbook Open Drive, if you don't know Open Drive, anybody just think of it as like a 30-minute index chart in front of you, and you're trading a breakout on that. There are just some rules based on where it opens and whatever. So I took the rules that were taught to me by the person who I learned market profile from. There's a book on that. I merged all that, and when I found, and that time I had no infrastructure to backtest properly, so I just downloaded whatever data I had from Zerodha. I think it was from 2015. Once I coded and found the results, I saw that there were not enough number of trades. So it cannot be the setup that I will trade. I can rely on trading with, because I had nothing else. So the whole thing is like when you are new, when you don't know how to develop system, because many of us don't, right? That time when you find something which you see like, okay, even if it has some edge, I mean, making money is any day better than losing it, right? So the common idea that gets to your head is like if it has decent edge, what people call like, okay, average hai lekin chalega. So you pick it up and you try to, just bring it, make it better. It's like you pick something which is average, and you're just fine tuning it to make it something more substantial out of it. And that's what I did. So I was not having enough number of trades over that 5-year period. So I started tweaking the rules. Like the I said कि ठीक है चलो गैप अप पूरा गैप अप प्रीवियस डे हाई के ऊपर नहीं भी हुआ है तो जस्ट क्लोज के ऊपर भी है, लेट्स टेक दैट. धीरे धीरे I added parameters. Then I started adding some volatility indicators की तरह पे मुझे I added more trailing mechanism based on volatility. So ऐसे करते करते वो जब सिस्टम तैयार हुआ, it was perfect to those conditions. Like if you remember that September, July, September, October 21 kind of day, October was fucked up, but sorry, but August, September, neat rallies, not too many deep pullbacks. So it was fitted to that. It used to make money like anything. But the moment it entered this January period, the pullbacks were killing me. Like I even posted this. I was looking into it, like what the hell is happening with that? Because I fitted it and I knew something is wrong, but I wanted to see it through, through evidence. So I started tracking all my trades, and where I entered, where it exited, how much was the MTM, how much of it was, lost during the day. I automated with one script and I started looking at those charts. Like I was seeing money, I was not getting it. All that bullshit took me like, 3 months to figure out. And this year I actually did one good thing. I went to Kora Reddy and I went through his program. We sat for like 8 weeks and he taught me like how to, test ideas. And one biggest point that I want to say, and if you can take it away, would be nice, because he said like there is no need to trade a losing system because there are so many you can trade. Initially, my brain was telling me like, oh, this is something that this is something that can make money. Maybe you're making some mistakes here and there, but otherwise it makes money. But then, one more thing, like as a discretionary trader, it was difficult for me to wrap my head around like these systems. Like some of these are like black box, like they work, they make money. I trade a couple of them, the positional ones. They make money. I have no idea how they make money, but I punch the orders, I make money. So it was difficult for me to accept that in the first place. So I was more, actually you can say, attached to the idea that okay, I trade this, I want to automate this, and I was just trying to curve fit and bring it to a solution. Like okay, I will just make it work somehow. You can say it's a bit of stubbornness, being naive, and the fear like okay, I don't know how to develop systems. If I will not trade this, how, what I will trade. But later down the line you realize like there are so many things you can trade. And that's where I moved to later on, and that's the whole reason of adding uncorrelated systems to just not get stuck with something that's not working.
Dude, that's awesome. I think firsthand going through the journey of starting off as a positional guy, starting off as a manual guy who's punching orders, and then trying to automate it, trying to do this from scratch, and then making a lot of mistakes that are quite repeatable in nature for anybody who will try to make the same transition that you're making. And then like it's really cool how you walked the path and arrived at the solution, understood the fact that hey, you are sort of anchored to your ideas and you're trying to make them work by doing this over tuning that you mentioned, and adding more parameters. Chalo Wix ka filter dal diya, ye dal diya, with a fixed data set where you're trying to capture the signal and you're trying to perfect the signal, but the output that you're trying to get towards is like a perfect system that has made a lot of money. And in that, the consequence of your actions is essentially you've created a strategy which is perfect for that particular environment. But if there is a slight change in the market environment, then that perfection becomes something that is going to lose money. So I think that's really really interesting. um
Yeah. Sorry, cutting you, Raghav. Pavanji, you mentioned something about a book. Would you like to share which book it was?
Jim Dalton's Markets in Profile, I think.
All right, great. Just for the listeners.
there was a comment, there was a comment that somebody wanted to know what the book was that Pawan mentioned. Super cool, man. Yash, let's hear your thoughts on this, man.
So basically, what overfitting is basically, suppose you have some data, right? You have some 2016 till today's data, and based on that data, you are trying to make some strategy to basically perfect all the market conditions. Okay, but might be possible कि जो इस दौरान 2016 till 22 whatever the market phase was might not be in the coming 23 or 24, मतलब 2023 and 24, right? So basically जो मतलब you what you'll realize is कि backtest में the strategy is working very good, and जैसे ही थोड़ा सा मार्केट के डायनेमिक्स चेंज हुए, कुछ कुछ भी चेंजेस आए, ट्रेंड थोड़ा कम हुआ, कुछ भी एनीथिंग, वो स्ट्रैटेजी स्टॉप यील्डिंग मनी और कुछ मतलब नेगेटिव स्टार्ट्स टू हैपन. Okay, so this is basically कि you are overfitting with all kind of basically you are trying to make money in all the scenarios. Okay, जो कि historically has happened and might or might not happen in the future. Instead of basically this is basically the data first approach, और मतलब इसको theoretically अगर बोलते हैं तो ये this is the data first approach, and you basically analyze some data, find some profitability in that data, find some pattern which has some profitability, and you make some rules to basically yield some profit out of that or exploit that. And the other thing that is basically the idea first approach. Okay, so let's just say कि you come across an idea like you want to trade basis the IV, or you want to trade basis the theta. Okay, you want to consume delta or anything, कुछ कुछ एक factor है that you want to say, अगर interest rate है कुछ या whatever is underlying, so you want to basically make money out of that. So first you are having the idea to basically consume theta or anything, and then you basically create a rule to how you can do that, then you test on that data. तो अब इसको जो how to eliminate this is key, you can basically create this in sample and out samples data. Okay, so basically create a train data and a testing data. So train data is where you basically apply your ideas or whatever. Okay, and basis that uh, if it is profitable or some kind of it is yielding some good metrics. Okay, then you can go on to basically testing that in the out sample or paper trading that, and then if it works out, then you can basically deploy that.
Yes,
Awesome,
just
man.
because you
Awesome.
mentioned,
I,
I'm sorry,
yeah, go ahead. Go
just
ahead,
because you
Pawan.
Yes.
mentioned in sample, out sample, do you have like a specific ratio you divide your data into and then train it and then just for out sample, or you do it like randomly? How do you approach that?
So, see, my approach is basically if I am considering 2019 till this 2022 data, then I'll what I do is till 2021 mid, okay, I'll be considering that as the in sample and then out sample. Or basically the other approach can be rolling window, wherein you can basically take some, let's just say 6 months, 12 months data, you can consider that as the in sample, and then उसके बाद का कुछ period you can treat that as the out sample, and then रोलिंग नेक्स्ट जो उसका है कंजिक्यूटिवली जो उसका जो नेक्स्ट आएगा 1 year का, यू कैन ट्रीट दैट अगेन एज दी इन सैंपल एंड देन उसके बाद आउट सैंपल. तो
Okay,
अगर
that makes
इन
sense.
ऑल दी सिनेरियोज, या अगर इन ऑल दी सिनेरियोज अगर आउट सैंपल में कंजिक्यूटिवली अगर पैसे बन रहे, ओके, if it is profitable in that scenario, then you can consider taking it to live. ओके, और बेसिकली जो भी इसका जो भी मेट्रिक्स बन रहा है, जो भी आउट सैंपल का, जैसे कि अपना जो भी जैसे कैलमार है या मैक्स ड्रॉडाउन है, एंड वो अगर कंसिस्टेंट आ रहा है, देन यू कैन कंसिडर इट टेकिंग टू लाइफ.
Thanks, that makes sense.
Yep, yep. I think another point that Yash mentioned, which was instead of taking a data first approach, you observe the market and take this idea first approach where you have a potential trading idea, and instead of uh, so yeah, you start with that trading idea and then you use the data to test that hypothesis. Your idea is your hypothesis. Your idea could be कि maybe volatility is underpriced or overpriced at this particular point in time when this happens. So that is your idea, and then the next step would be where you try to for uh, look look at the data and figure out whether that idea is actually supported by that data or not, right? Like as opposed to you start with the data and you just not knowing anything about uh, market regimes, market scenarios. You just try to find an idea. You just try to find a strategy from the data itself, and the strategy itself becomes your idea. Whatever the outcome, whatever the output strategy is that has made money, that itself would be your idea. So it's like taking the approach from the other side. That is really really interesting. And another point here, with regards to in sample and out sample, that's also a really good point. And we actually have a bit of marketing here for our product, but we actually have paper trading on our platform precisely for this reason, which is, a lot of people spend a lot of time on our platform tuning parameters, backtesting strategies, and then they have these really beautiful looking 45-degree upward sloping lines which are essentially, every day the strategy has made money in the past based on backtested data. But before you actually put actual money on that data and expect that same beautiful equity curve to replicate itself in the live market, you should probably spend some time paper trading that strategy without putting actual capital on that strategy to try and just justify that, hey, whatever you found in the past is something that you are continuing to find in the live market today before you actually put money in that strategy. A lot of people, instead of paper trading, what they'll say is you just start with a small amount. You just start trading with a one lot, and that's also acceptable if your capital size allows you to lose money in that one lot. The benefit from that is that at least you feel like there is some skin in the game, and like you whatever profit or loss that one lot trading gives you is actually something that is directly linked to your pocket. So maybe it's more just like a forcing function to make you think a little bit more about the strategy that you are running, and whether you will be comfortable experiencing these losses if you're running these losses in the live market with a larger quantity. Vihan, we made you speaker. Yash has actually mentioned you and mentioned one of your programs in his in his introduction, and how he got into trading. So I would actually we'd love to hear your thoughts on curve fitting, but I would also like to hear about that program that he mentioned. That's something that I'm curious about as well. You have the floor, Vihan.
थैंक यू भाई, थैंक यू यशराज। पहले मुझे ये बताओ यार, एम आई ऑडिबल? बिकॉज मैं गोवा में हूँ, यहाँ पे मुझे वाईफाई इंटरनेट का आइडिया नहीं है हाउ क्लियर इट इज। तो आप एक बार पहले बताओ, एम आई लाउड एंड क्लियर?
ऑडिबल सर,
हाँ,
ऑडिबल।
वेरी वेरी सटल वे ऑफ सेइंग कि मैं गोवा में पार्टी कर रहा हूँ। है, चल आगे
मैं,
बढ़।
अरे भाई वो तो मैंने सबको ढिंडोरा पीट दिया, मैं तो एक्चुअली जानना चाहता हूँ कि मेरी आवाज आ रही है कि नहीं। तो जो प्रोग्राम की आई एम अज्यूमिंग यशराज बात कर रहा है, वो आमाडेयस करके था 2019 में, वेयर आई डिड। एंड उस टाइम क्या, आज भी ट्रेंड इज यूजुअली टू हैव लाइक अ वीकेंड और लाइक अ 1 मंथ 3 मंथ टाइप ट्रेनिंग। और मुझे ये बहुत क्लियर था कि भाई क्वांट ट्रेडिंग, एल्गो ट्रेडिंग स्पेशली डन फ्रॉम स्क्रैच इज नॉट समथिंग यू कैन लर्न इन 1 or 3 months, simply because of the sheer magnitude of prerequisites required to begin algo trading। क्योंकि इट्स एट द कॉन्फ्लुएंस कि भाई आपको कोडिंग भी आनी चाहिए, अगर आप एक्चुअल क्वांटिटेटिव एनालिसिस करना चाहते हो तो आपको थोड़ा बहुत डेटा साइंस, मैथ, स्टैट्स पढ़ना पड़ेगा, फिर ट्रेडिंग के फंडे पढ़ने पड़ेंगे। तो इट्स बेसिकली 3 subjects एज प्री रिक्विजिट्स बिफोर यू कैन इवन गेट टू दैट कॉन्फ्लुएंस। तो इसलिए वो 1 साल का मैंने प्रोग्राम स्केड्यूल किया था। तो एंड वो मतलब बस एक ही बार किया गया था, उसके बाद आई नेवर रिपीटेड इट। वी वर प्लानिंग टू बट इट डिडंट मटेरियलाइज। तो आई एम अज्यूमिंग यशराज इज टॉकिंग अबाउट दैट, एंड ही वाज अ स्कॉलरशिप स्टूडेंट देयर। तो मैंने 10 लोग लिए थे जिनसे मैंने फीस नहीं चार्ज की थी, बेसिस की उनका जो एप्टीट्यूड था कि भाई ये इनके अंदर आग लग रही है तो मैं फ्री में सिखाऊंगा। तो यशराज वाज वन ऑफ देम।
Nice, man.
तो
Nice. I think. Sorry, I'm interrupting you, but I think we should certainly, this is something that you and I should certainly collaborate on going forward. Education, I think, is really, really important. And now that we have embarked on this journey of, building things for retail traders and making algo trading easy for retail traders, we should also give them the opportunity to truly understand how the sausage is made inside the kitchen. And so I think this is something that we will certainly follow up with you on with regards to collaborating on. Okay, how do we take this forward? Amadeus, I like that name. ठीक है.
मोस्ट
Tell us
वेलकम भाई।
about your curve fitting, bro. What is your opinion, thought? What do you know about curve fitting? How do you define it, etc.?
द डेफिनेशन आई थिंक अब तक तो सबको क्लियर हो ही गई होगी कि भाई कोई भी ऐसी चीज बनाना जो प्रायर डेटा पे बहुत सुंदर दिखती है बट फ्यूचर डेटा पे काम नहीं करती, या मतलब जिस चीज पे बनी थी उस डेटा के बाहर काम नहीं करती, दैट इज द डेफिनेशन ऑफ अ मॉडल और अ स्ट्रेटेजी बीइंग कर्व फिट और ओवरफिट। तो जो प्रॉब्लम है आई थिंक वो बहुत वेल डिफाइंड है कि भाई मैं कुछ डेटा यूज करके कुछ बना रहा हूं पर मुझे एक्चुअली पता नहीं कि ये चीज काम करेगी कि नहीं गोइंग फॉरवर्ड। द कॉस्ट ऑफ फाइंडिंग दैट आउट इज टाइम इन हाउएवर मैनर यू चूज टू अंडरस्टैंड दैट। पहले क्योंकि डेटा इटसेल्फ इज अ मतलब कैप्सूल्ड वर्जन ऑफ टाइम इन आर केस, राइट? क्योंकि अपन काम ही टाइम सीरीज डेटा के साथ करते हैं, तो वो डेटा एक तरह से खुद वक्त था। अब one way of knowing whether what I've created will work or not is to create it and then just run it. जो आगे आने वाला वक्त है वो मुझे बता देगा कि भाई जो चीज मेरी बनाई हुई है वो चलेगी कि नहीं भाई एक्चुअली चलाएंगे इट ऑन दैट टाइम, विच इज ऑब्वियसली द हार्डेस्ट वे और मोस्ट एक्सपेंसिव वे ऑफ फाइंडिंग दैट आउट. अगर हम उसको एक्चुअली लाइव डिप्लॉय कर दें, उस पर पैसा लगा दें और वो चले ना चले, इज द रिस्कीएस्ट वे ऑफ फाइंडिंग दैट आउट. तो नाउ द गेम बिकम्स कि व्हाट काइंड ऑफ ट्रेड ऑफ एम आई विलिंग टू मेक in terms of the building of this model or building of this strategy, so that ये जो expense है मेरा to find this out वो कम हो जाए, both मतलब financial and temporal. तो एक सिंपल ऑब्वियस तरीका या मतलब या वेल नोन तरीका है कि भाई डेटा को स्प्लिट कर दो इन सैंपल आउट सैंपल. वो इन सैंपल आउट सैंपल का प्रेमिस ही यही है कि भाई जो सम पोर्शन ऑफ दैट कैप्सूल्ड टाइम आई एम यूजिंग एज कि भाई ये पहले हो चुका है और उस पर मैं मॉडल बना रहा हूं, एंड वो जो आउट सैंपल है वो कैप्सूल टाइम है जिसको मैं प्रॉक्सी कर रहा हूं फ्यूचर टाइम, कि भाई ये आने वाला वक्त है जो मेरे मॉडल ने देखा नहीं है. दैट इज व्हाट द आउट सैंपल इंटेंड्स टू डू. The problem which I see with most people that even know or try to adopt this approach is कि वो जिस चीज को बोलते हैं आउट सैंपल ओवरफिटिंग, वो क्या करेंगे कि भाई इन सैंपल पे अपना सारा मेहनत करके फिर आउट सैंपल पे देखें क्या परफॉर्मेंस थी, एंड लेट्स से दैट परफॉर्मेंस इज बिलो व्हाट दे वर एक्सपेक्टिंग, वो सब पार है. अब वो क्या करेंगे, दे विल गो बैक टू द इन सैंपल, डू सम ट्यूनिंग ऑफ द स्ट्रेटजी और द मॉडल और व्हाटएवर ऑफ द पैरामीटर्स, एंड देन वो आउट सैंपल पे फिर से चेक करेंगे. तो अब इसमें हो क्या रहा है कि आपका आउट सैंपल जिसको आप बार बार यूज कर रहे हो वो एक तरह से इन सैंपल ही बन चुका है, बिकॉज आउट सैंपल वो जो फ्यूचर टाइम इज आइडियली सपोज टू बी सीन ओनली वंस. तो वो जो प्रेमिस था या वो जो अपना फंडामेंटल प्रॉमिस था अपने आप से कि भाई आउट सैंपल पे मैं वैलिडेट करूंगा अपनी चीज कि ये चीज चलेगी कि नहीं फ्यूचर में, वही हमने तोड़ दिया अपना प्रॉमिस, क्योंकि हम उसको बार बार व्यू कर रहे हैं इन द मॉडल बिल्डिंग पाइपलाइन और द लाइफ साइकिल ऑफ दैट स्पेसिफिक मॉडल. तो अब इसका मतलब एक और तोड़ बन जाता है कि भाई मैं 3 हिस्सों में स्प्लिट कर दूं, इन सैंपल कर दूं, वैलिडेशन कर दूं, आउट सैंपल कर दूं. तो मैं इन सैंपल रिपीटेडली यूज कर ही सकता हूं, वैलिडेशन पे मैं बार बार वैलिडेशन के लिए चेक करूंगा, एंड देन वो जो तीसरा पीस आउट सैंपल वो सिर्फ मैं एक बार देखूंगा. एंड दिस you can do in a more sophisticated way also depending on what kind of model you're building, जिसको क्रॉस वैलिडेशन कहते हैं कि बहुत सारे टुकड़ों में तोड़ दो और फिर थोड़े थोड़े टुकड़ों में आगे बढ़ते हुए करो. अगेन ये सारी चीजें जो मैं कह रहा हूं विल बी वेरी और हैव सम काइंड ऑफ स्पेसिफिसिटी टू व्हाट यू आर एक्चुअली बिल्डिंग ऑल्सो. अगर आपकी चीज ही ऐसी है जो रिक्वायर करती है कि कम से कम 1 साल का डेटा हो मेरे पास ट्रेन करने को, तो आपका जो इसका यूजेज है विल बी वेरी डिफरेंट कंपेयर टू समथिंग जो फॉर एग्जांपल 1 हफ्ते के डेटा पे बनाई जा सकती है. विद दैट असाइड मतलब जो जनरल प्रिंसिपल है उसमें बेसिकली अपने को कोशिश करना है कि भाई हम कम से कम डेटा यूज करके वाइल बिल्डिंग द मॉडल एंड ज्यादा से ज्यादा डेटा यूज करके टू वैलिडेट इट, हम कैसे अपने आप को वो तसल्ली दे सकते हैं कि भाई जो मैंने बनाया वो एक्चुअली काम की चीज है. तो एंड इसका अगेन मतलब आई एम जस्ट थिंकिंग आउट लाउड या टॉकिंग यू नो वो स्ट्रीम ऑफ कॉन्शियसनेस टाइप. अभी द बुक आई वुड सजेस्ट पीपल टू रीड और द पर्सन जिसके टेक्स्ट आई वुड सजेस्ट रीडिंग especially on this thing कि भाई how to maximize the usage of the data that you have at hand. Actually 2-3 लोग हैं जिनकी किताबें are good in this realm. रॉबर्ट पार्डो करके हैं, उनकी बुक इज ऑन बिल्डिंग एंड ऑप्टिमाइजिंग सिस्टम्स एंड ही गिव्स अ लॉट ऑफ गुड ज्ञान ऑन हाउ टू अवॉइड दिस. द अदर इज टिमोथी मास्टर्स, उनका 2-3 टेक्स्ट है. इनफैक्ट मैंने अपनी बहुत पहले मैंने एक एल्गो कन्वेंशन की जो ऑनलाइन टॉक थी उसमें भी ये मेंशन किया था कि मतलब हाउ यू परम्यूटेशन कॉम्बिनेशन तो मारो गोली, परम्यूटेशन बेसिकली इज हाउ यू कैन यूज परम्यूटेशंस टू मैक्सिमाइज द यू नो द स्क्वीज आउट ऑफ योर डेटा. जो एक क्योंकि डेटा एट द एंड ऑफ द डे हमारे पास बहुत लिमिटेड है. हमको लगता है अरे 2016 से डेटा बहुत बड़ी बात है ऑप्शंस की जहां तक हम बात कर रहे हैं. 2016 से लेके आज तक इजंट रियली दैट मच टाइम टू वैलिडेट मॉडल्स ऑन. तो मतलब हिज बुक्स और हिज टेक्स्ट वुड बी रेकमेंडेड कि आप वो पढ़ो, तो आपको कुछ आइडिया लगेगा कि भाई मैं कैसे एक गिवन पीस ऑफ या गिवन सैंपल ऑफ डेटा का जो यूजेज है या उसका जो है वो मैक्सिमाइज कर सकता हूं. क्योंकि एवरी एडिशनल डेटा दैट यू यूज विद इन योर ट्रेनिंग प्रोसेस इज बेसिक दैट टाइम दैट यू हैव कॉस्टेड योरसेल्फ, कि अब वो आप वैलिडेशन में यूज नहीं कर सकते. तो दैट वुड बी अ टेक्स्ट आई वुड रेकमेंड. एंड माई मोस्ट सिंपल एडवाइस टू पीपल जो ये कर रहे हैं, एक्चुअली वे टू चेक, मैं कहता हूं मारो गोली कि आपकी स्ट्रैटेजी अच्छी है कि नहीं, आपका रिसर्च प्रोसेस अच्छा है कि नहीं। अगर आप ये फिगर आउट करना चाहते हो, आप क्या करो, आप एल्गो टेस्ट पे जाओ, आप 6 महीने का डेटा ईयर मार्क कर दो कि भाई आउट ऑफ सैंपल है। अब आप जो भी तरीके से एल्गो टेस्ट पे स्ट्रैटेजीज बनाते हो, वट एवर योर अप्रोच टू बिल्डिंग दो स्ट्रैटेजीज इज, आप ये जो 6 मंथ एक्सक्लूडेड डेटा जो बचा हुआ रहेगा आपके पास, जितने भी महीने हैं जितने भी सालों का, उस पे वो सारा रिसर्च प्रोसेस खींच दो, वट एवर यू चूज टू डू। ये 6 महीने आप देखो ही मत, जो आखिरी वो है। जब आपका सारा काम हो जाए, स्ट्रैटेजी बन जाए कि भाई अब तो ये सीधा लाइव चलानी है, ये याद रखो, मैं एम नॉट अगेन, ये आउट सैंपल इज नॉट लाइक अ रिसर्च प्रोसेस वाला आउट सैंपल दैट आई एम सेइंग। इसको मानो कि ये डेटा हमारे पास है ही नहीं, और उस कदर आप अपनी पूरी स्ट्रैटेजी बना लो। अब सिर्फ उस आखिरी 6 महीने पे आप देखो कि भाई मेरी ये स्ट्रैटेजी जो मैंने ये पिछले बाकी महीनों पे बनाई है, ये वो कर रही है जो मैं इंटेंड कर रहा था कि नहीं, वो टाइप की परफॉर्मेंस है कि नहीं है। अगर यहां पे उस स्ट्रैटेजी की परफॉर्मेंस खराब है या वो नहीं है जो आप एक्सपेक्ट कर रहे थे, तो ये स्ट्रैटेजी नहीं, आपका रिसर्च प्रोसेस ही खराब है। तो नाउ योर द प्रॉब्लम दैट यू शुड बी सॉल्विंग इजंट कि भाई ये स्ट्रैटेजी खराब है, इसको मैं चेंज करके ठीक करता हूं, क्योंकि वो वापस आउट सैंपल ओवरफिटिंग पे आ जाओगे। वॉट यू हैव टू नाउ सॉल्व फॉर इसकी भाई मेरा स्ट्रैटेजी बनाने का तरीका ही बेकार है, उसको कैसे ठीक करूं। तो दैट वुड बी लाइक माई व्हाट यू से बॉटम लाइन, कि अगर आप अपने आप से वो करना चाहते हो कि भाई अपने आप से सच का सामना टाइप, तो आप ये चीज फॉलो करो, एंड दिस विल गिव यू क्लैरिटी ऑन नॉट योर स्ट्रैटेजी बट योर रिसर्च प्रोसेस इटसेल्फ, कि भाई मेरा जो रिसर्च करने का तरीका है वो सही है कि नहीं। क्योंकि अगर वही गलत है तो आप कुछ भी कर लो, कितने भी कॉम्बिनेशन ट्राई कर लो, कितने भी इंडिकेटर ट्राई कर लो, कोई भी टाइम पे एंट्री करो, कोई भी टाइम पे स्टॉप लॉस लगाओ, आपका प्रोसेस ही गलत है, तो आज नहीं तो कल आप मार खाओगे। एंड देन आप अगर इफ लेट्स से कि भाई आपका प्रोसेस अच्छा है रिसर्च का एंड दिस वर्क्स, देन वेल एंड गुड। बट इफ इट डजंट, देन एटलीस्ट आपको एक क्लैरिटी तो मिल गई कि भाई मेरा अभी रिसर्च करने का तरीका ही गलत है, इसको पहले ठीक करना है। एंड देन दैट इज अ डिफरेंट कॉन्वर्सेशन कि वो कैसे करो, बट एटलीस्ट नाउ यू नो।
Nice man, nice. I think there's a lot in there. I think सबसे starting point तो ये था कि what Yash talked about with splitting your data into a training set and then a testing set, उसको भी break करो एक तीसरी चीज में, which is a training set, a validation set, and then finally a testing set where you optimize on your training set, you you validate on your validation set, uh, and then finally like you essentially use these two data sets for your optimization, while finally once you think you're ready, that's when you need to run it against the test set. तो 2 से 3 में split कर दिया. That's a very interesting and that is sort of the general approach that most machine learning engineers, any stable machine learning system that is currently being used in production, whether that's self-driving cars or any other machine learning system that's out there in production, it follows that exact same methodology. So the
इसमें
awesome on that.
एक एक पॉइंट टू नोट दो, स्पेशली क्योंकि ये जो मशीन लर्निंग वाला वो है, व्हेन आई टॉक टू अदर क्वांट्स आल्सो, वो मतलब दे ब्रिंग दिस अप। वन थिंग वी शुड नोट एज मतलब पीपल हु आर यूजिंग फाइनेंशियल डेटा एज देयर इनपुट टू द मॉडल बिल्डिंग, कि अपना डेटा बाकी सारे मशीन लर्निंग प्रॉब्लम से कंपेयर्ड एक तो ज्यादा नॉइजी है, एंड दूसरा इजिली रेप्लिकेबल नहीं है। जैसे आप इफ यू आर ट्रेनिंग फॉर एग्जांपल फॉर ड्राइविंग, आप और गाड़ियां चलाओ और रोड्स, मतलब रोड्स बहुत सारी आप इकट्ठा करते रहो, वीडियो फुटेज उस पर ट्रेन करो, आप सिमुलेटेड रोड्स बना के उस पर सिम्स रन कर सकते हो, सब कुछ कर सकते हो, क्योंकि आपका जो डेटा जनरेटिंग प्रोसेस है सो टू स्पीक वो नोन है। या फोटो में एप्पल की और ऑरेंज की या डॉग्स की कैट्स की, ये सारी आप बनाते रह सकते हो, बट ट्रेडिंग के साथ ये पॉसिबल नहीं है, क्योंकि अपने को मतलब यहाँ पे तो अपनी फाइट ही है कि भाई जो डेटा जनरेटिंग प्रोसेस है वही नहीं पता अपने को। दैट इज व्हाट वी आर एज ट्रेडर्स और क्वांट्स ट्राइंग टू फिगर आउट, और प्रॉक्सी। तो समथिंग टू नोट, और मतलब व्हाट दिस बेसिकली मींस इज एवरी व्हाट यू से पॉइंट ऑफ डेटा इन ट्रेडिंग is far more expensive or far more valuable than in most other machine learning problems actually. तो आप उसको कैसे, एंड इज फार मोर नॉइजी ऑल्सो, क्योंकि एक फोटो में देख के पता है कि कैट है कि डॉग है एटलीस्ट देख के, बट फाइनेंशियल डेटा में वो है नहीं कि एक आदमी को लग रहा है ट्रेंड है, दूसरे को लग रहा है रिवर्सल है, तीसरा कह रहा है कंसोलिडेशन है. तो द नॉइज इन मशीन लर्निंग और सॉरी इन फाइनेंशियल टाइम सीरीज डेटा is much higher compared to the others. तो ये सारी चीजें भी when you're doing this model building and if you're looking to borrow from machine learning, ये चीज थोड़ा नोट करने की है because you'll have to adjust your methodology accordingly.
I think I would like agree with a lot of that. There is some things over there which I would say is not entirely clear, right? To be honest, जैसे तुमने बोला कि machine learning problems which are not related to finance and to the real world, like a lot of those are well defined and easier to understand. And one of the reasons that's the case is because our neural net, we all have a neural net. Our neural net is our brain. Our neural net is optimized to, like, we don't know how it works. Nobody knows actually how it works 100%, right? Like how exactly our brain works and how we perceive all these different data points to arrive at, yes, this is Vihan talking. I can recognize his face, so that's a facial recognition. That I can determine what I can differentiate between a cat and a dog. I can do it very easily. But if you actually try to do it, if you actually try to train a machine to do it, it is a solved problem, but it wasn't a very easy problem, right? So I think one bias that is there in what you're saying is because our neural net, अपना खुद का जो neural net is not very well trained to understand and to assimilate information from financial time series data. We have millions of years of evolution which has driven us to identify things, sort of assimilate the data that we see, which is visual cues, things we hear, things we smell. Based on that, our neural net performs certain classifications, makes us perform certain actions. And because of that billion year evolution process, a lot of these things seem easier. But I would say, the opposite of what you're saying, where the complexity in financial data that a machine learning system can probably pick up is probably, like, it's hard to say whether it's like the complexity is more or the complexity is less, but our own biases make us feel that it is more. That is just something that I would say. Next, let's actually move on this topic, right? So the next thing we wanted to talk about was like in fact Vihan actually touched on this when we started, which was how do you catch potential curve fits, right? So we for a retail trader, because or like a new trader, this conversation is targeted towards them, and what we want to do is we want to give them sort of a like a rule of thumb or some other low resolution trick. And I say low resolution because the data that they have is not going to be the same data that Vihan has, and the ability to harness that data is also not something that there's not going to be much of a comparison between that. So based on the information that is available to them, like in sample and out sample is one very good starting point for this. And this is something that I think we should also on AlgoTest, our platform, we should also probably give some kind of an indication or some kind of a dial for users to split their backtesting optimization data set into one aspect. So like one way to check this right now is, like Vihan said, you build and optimize your strategy from, for example, 2016 to 2021, and then you run a backtest only for the year 2022 after you've optimized your strategy for that previous period to see whether essentially how robust your strategy was that you developed in the past in the year 2022. So here your in sample will be the period 2016 to 2021, out sample will be 2022. Another approach is what Yash mentioned, which that Yash mentioned earlier is, you can probably backtest and optimize using your full data that is available to you, but before going live, you paper trade for a period of time. Here, the backtest is your in sample, the paper trade is your out sample. Now, how long this period of time should be? Also, there's no correct answer here. There are a lot of personal preferences on what your risk aversion parameter says. Before going live, I want to do at least n number of months of out sample paper trading before I actually put money in this. So this is certainly one thing. Do you guys have any other sort of quick ways in which you think like quick, I probably shouldn't say quick, because just any other ways in which.
ब्रो वन वन वुड बी पैरामीटर सेंसिटिविटी. ये एक्चुअली ये जो इन सैंपल आउट सैंपल है कैन डेफिनेटली बी वन ऑफ दोस. मतलब इज लाइक अ फीचर सजेशन कि आप क्या करो. आप जब बैक टेस्ट का आप वो ले रहे हो, क्या कहते हैं, बैक टेस्ट जब डेट दे के आपको भेज रहा है यूजर, आप वहां पे डिमार्केट करवा सकते हो इन सैंपल आउट सैंपल या इन सैंपल वैलिडेशन आउट सैंपल. सो यू रन द बैक टेस्ट ऑन द होल थिंग बट डोंट प्रेजेंट ऑल द इंफॉर्मेशन एट वंस, डिपेंडिंग ऑन हाउ द यूजर चूजेस द स्प्लिट. एंड आप सिर्फ इन का दिखाओ एंड उसको खेलने दो उस पे. एंड जब वो कहता है कि अब भाई मुझे इन आउट वैलिडेशन या इन एंड आउट दोनों दिखाओ, तभी आप उसको सिर्फ आउट सैंपल परफॉर्मेंस दिखाओ. सो दिस इज समथिंग यू कुड चूज डिपेंडिंग ऑन द कॉम्प्लेक्सिटी एंड आपका क्या
Vihan,
इकोनॉमिक है.
Yeah, go
हाँ
ahead,
ब्रो.
Pawan.
can I speak?
Yeah, of course, of course.
Yeah. So Vihan, like he mentioned, right? Bhai, parameter sensitivity, he mentioned it's a very good point, but we have to explain it in layman terms,
Pawan
otherwise
sir,
most.
you're there?
नहीं, मैं उस पे भी आ रहा था ब्रो. मैं उसको भी एज अ फीचर सजेशन आई वाज थिंकिंग कि व्हेन अ बैक टेस्ट इज रन, मतलब पैरामीटर सेंसिटिविटी फॉर द पीपल लिसनिंग इज कि भाई हल्का सा चेंज इन योर पैरामीटर का नंबर. फॉर एग्जांपल आपने 20% स्टॉप लॉस डाला था, उसको 21 या 19 करने पे आपका जो फाइनल स्ट्रेटेजी परफॉर्मेंस है उसमें कितना बड़ा बदलाव आता है, ये आपकी पैरामीटर सेंसिटिविटी हो स्ट्रेटेजी की और उस स्पेसिफिक पैरामीटर को. तो एंड जैसे अब आपके पास बहुत सारे पैरामीटर्स हो सकते हैं अपनी स्ट्रैटेजी में कि एंट्री टाइम, एग्जिट टाइम, स्टॉप लॉस, नंबर ऑफ लेग्स, नंबर ऑफ एंट्रीज एंड आई डोंट नो, आई थिंक री एंट्रीज, जो भी अलग अलग चीजें हैं दैट यू कैन डिसाइड एज इनपुट. तो इन सबके हल्के हल्के चेंजेस करने में नंबर में आपका फाइनल रिजल्टिंग स्ट्रैटेजी कितना इफेक्ट होता है, दैट इज समथिंग टू नो. क्योंकि अगर कोई ऐसा नंबर है, आपने खूब मेहनत की, खूब परम्यूटेशन रन किए, और कोई एक नंबर है जो बहुत सुंदर लग रहा है हिस्टोरिकल डेटा पे, बट वो उसके अंदर कोई स्टॉप लॉस आप हल्का सा ऊपर या नीचे कर दो, तो वो परफॉर्मेंस एकदम बंटाधार हो जाएगा कि भाई विद दिस सेट एट 20.5 इट इज वेरी गुड, बट सेट एट 21 इट इज नॉट इज गुड या इज सिग्निफिकेंटली वर्स. 921 पे बहुत अच्छी परफॉर्मेंस आ रही है बट 922 पे नहीं आ रही. इसका मतलब है कि भाई दिस कुड बी, अगेन दिस, यहां पे कोई भी जो चीजें हो रही है वो कोई गारंटीज नहीं है, बट दिस कुड बी अ सिम्टम और इट कुड सिग्नल कि भाई आपकी ये जो स्ट्रैटेजी है ओवरफिट हो रखी है स्पेसिफिक पैरामीटर एंड हिस्टोरिकल डेटा पे. तो व्हाट यू आर लुकिंग फॉर हियर इज इन एज अ टर्म रोबस्टनेस, कि भाई थोड़ा बहुत चेंजेस ऊपर नीचे करने में पैरामीटर्स में आपकी परफॉर्मेंस ऑफ द स्ट्रैटेजी भी थोड़ी बहुत ही ऊपर नीचे होती है, बहुत झटके से गिर नहीं जाती. एंड दिस आई डोंट नो, अगेन डिपेंडिंग ऑन आपका बैक एंड परमिट करे या आपके इकोनॉमिक्स परमिट करें, तो this is something you could show in like a good 3D visualization ki how the performance of the strategy is changing or the metrics are changing basis small changes in that parameter set. Raghav bhai, no, depending on, I don't know if this is feasible or not.
हाँ, मैं तो बोलता हूँ तुम users can buy an unlimited plan and then once they've frozen a strategy, they're free to tweak parameters as much as they want to see, you know, how the
Perfect.
strategy's results are actually sensitive to these parameter tweaks. Pawan, you wanted to speak, right? Go ahead, please.
Yeah, I was talking along the same line. So it is something like you mentioned, right? Like we keep on testing things and then you end up with like some X moving average and X level of RSI or whatever. And then that gives you a perfect result. But if you shift that, the whole thing shattered into pieces. So that is a sign that whatever you had was coveted. So easy way to test that, especially if you're coding your own things, it's very easy to do that. Couple of variables and you can find. And like somebody asked, like, the difference between optimization and overfit, man, that is a question like, nobody can answer. I think it's a very personal thing because, but it's logical as well. Like Yash said in the beginning, if you start with an idea and then you go and test that idea on the data, basically you're working with some hypothesis. Maybe let's say at the end of the day, everybody's trading volatility or direction with some kind of price action, right? No matter what you trade, it all boils down to these two. So whatever your whole fundamental idea is based on, it's breakouts, breakdowns, or whatever. Like you're trading mean reversion, or you're trading something like you have made a nice, sophisticated pricing model for volatility. You're trading that, something like that. Whatever your core idea is, if you have, some knowledge about it, like if you have been doing that for a decent period of time, you'll know when you'll cross the line. Like adding one parameter to just, when I try to optimize, I mostly try to, tune the trading frequency, because some signals are not like that. There are some systems which give you too many trades. So those are simple things. If you work around that, it's fine. But if you keep on adding indicators, especially I'm mentioning the word, like you add some RSI or whatever, and you try to improve performance using that, even a couple of indicators can bend that thing pretty bad. So I don't know how to define, like, a line between optimization and overfitting. I don't know if it is possible to. You cannot differentiate, but as I said, it's logical. Like when you're doing it, if you just take a step back and give it a clean look, you'll know what you're doing. It's just common sense of beyond a point.
Yeah, I think certainly there's like the point here is that is drawn home is the fact that it's very difficult to be 100% confident of whether my system is robust and I have not overfitted it, as opposed to what is that level of doubt that uh, the system that I'm just about to go live with, um, just the system that I'm just about to go live with, what is the probability that this system is curve fitted or not? And a couple of these touch points that we've mentioned, right? One is the in sample, out sample approach, where you can do it in two tiers. You can split your existing historical data into an in sample and an out sample. And then once you're confident with your in sample optimization, you check against the outsample data. If that looks good, then you do another layer of outsampling, which is paper trading, where you're like, okay, let's give it a little bit more time and see how different my paper trading, my virtual trading with today's data, with tomorrow's data, with day after tomorrow's data for a period of time, how different that is or how similar that is to my back tested results. This step, and then the next thing you could also do is what Vihan mentioned, right? Which is the idea of tweaking the parameters of your strategy to see how sensitive your stats, like your PNL, your ROI, drawdown, etc., are to those parameters, to small changes in those parameters. If changing a parameter by a small amount causes large fluctuations in your strategy stats, that's a sign of curve fitting. A lot of people ask us, well, this is actually funny though. Like a lot of people ask us on the execution side. So we went live with execution where we said that, hey, you're able to backtest a strategy now, and then you should be able to execute that strategy through our execution platform. So what they see is, they see differences on a daily basis between their backtest result and what they see in the live environment, and then they ask us, okay, why is there a difference? And we say that in backtest we're using 1 minute open high low close data. In the live, for live trading, we are giving you the actual broker feed, which is the 1 second frequency feed. And because the backtest is in the open high low close data, any action you take is in one of those prices or between the high and the low, right? So a lot of times people tell us, hey, please, instead of using the 1 second data, please use the 1 minute data to trade, and please do this in the candle close. Please take this action on the candle close, like a stop loss, instead of on the candle open. And they usually do this after seeing, one day's mismatch between a backtest and a live execution. But what we say, like, to bring this point home to what Vihan mentioned earlier about the sensitivity of your strategy results to your parameters, we say that you should be agnostic. You shouldn't care between a candle open and a candle close, because if it makes money in the long run on a candle open, in the long run it should also make money with a candle close. That is what defines a robust system. If it doesn't, then there's probably a curve fit here. Like another thing you could do is, when you create your candle. So in our case, a candle starts at 9:15 a.m. and it closes, like the 1 minute candle will close at 9:15 and 59 seconds. So the candle spans 59 seconds worth of data, and it compresses that data into 4 points, which is an open, a high, a low, and a close. Right. So another thing you could do is you test your strategy with this open, high, low, close data. If you have this 1 second frequency data available, another approach people use is you can shift the candle. You backtest your strategy, or you uh, create your strategy using this candle, where the definition of a candle is like the 9:15 candle would be 9:15 to 9:15:59 seconds. But then what you do is you change the definition of your candle. You say, okay, now my candle will be from 9:15. The start point will be 9:15 30 seconds, and it will go till 9:16, 29 seconds, right? And then you see how you use the same parameters to backtest the strategy. The only thing you've changed is your definition of candle, where you've shifted your candle definition forward by 30 seconds. And then if the PNL varies significantly, if the results vary significantly, then that's also a sign of curve fitting. So the idea here is that there are and let's say you pass these this litmus test, or these set of tests that we've described here. One is the sensitivity of strategy to parameters. The other is in sample, out sample. Now that you're confident that your strategy is working in the out sample the same way it's working in the in sample, and you've also checked the robustness of your parameters, you've tweaked your parameters, you've shocked your parameters, and you found that your strategy is still giving similar returns. You've also passed the litmus test of paper trading, and you decide to go live. Can you say with probability 100%, with like a sure shot guarantee, that your system is not overfitted, not curve fitted? The answer is no. That is like one of those deep philosophical things, because it can happen the day you go live with after having your strategy go through these tests. Once you go live, the results could be just completely different from what you saw on the back test, what you saw in the paper trade, what you saw in your validation set, your test set. So yeah, so this is one of those things about life and about trading, right? Like nothing is deterministic, or at least we don't have the information or the ability to harness all that information to make a claim that everything is deterministic. But because of that lack of information, we say there is still some probability that we are wrong. What we'll do now is, guys, it's 10 o'clock. What we'll do is we'll take some questions. There were some follower questions that people had sent us that they wanted answers to. So we can go through those. Yeah, go ahead.
Yeah, I just want to add something for a minute, something that wasn't covered in the whole overfitting debate. क्या होता है? I get my best ideas from other people I know on Twitter and otherwise who trade the markets, and from the markets itself, right? So what happens is, a lot of these strategies that people test on AlgoTest, or a lot of people trade, are straddle based systems. So there was a point in time till last year, जितने भी बजे बेच दो, कुछ भी SL डाल दो, on the long run it would make money. So what happens is, the recent ideas that we have right now are all overfit anyway. You're only thinking about things that have worked in the last few months, because these are the ideas you're seeing on Twitter. This is what you're seeing from the market. So your purity of out of sample doesn't exist anymore, because you have access to the data. You've seen it every day. You've listened to people. So out of sample, तो वो purity है ही नहीं. Though now if I say, okay, my recent data is in sample, I'll test previous data as out of sample. That will also work, because till last year something or the other would have worked anyway. So it's a very tough call, because your best ideas come from the place where your overfitting also happens. So I would say, if possible, if you're a pure system trader, stay away from markets and stay away from Twitter bucker when it comes to ideas, because all of these are overfit anyway.
And one more thing I would like to add is basically whatever strategy you are trading, okay, you should know on what basis is that strategy making you the money. Okay, so might be ki selling straddle might be giving you some theta. If it is coming in terms of profit, ROI, it is coming some say 30-40% annualized, then you can next move on to checking the max drawdown. Okay, so max drawdown is where ki your main basically psychology will come into picture. Ki bhai, will you be able to sustain with that much of drawdown? Okay, say 5, 6%, 10% something. Okay, so will you be able to cope up with that? अब अगर वो max drawdown is there, then how much time, कितना उस max drawdown का कितना time you were in the drawdown? Okay, and basis this you will be able to then calculate the Calma. Okay, Calma ratio is basically the risk or returns to basically max drawdown. Okay, so ये जो रहेगा इसका एक अलग then statistical वो है, then it is going to be like कुछ अगर 5-6 का alma you are getting, then it is good to go. Okay, or ये when you said कि 3 strategies you were trading, so 3 strategies में you will combine to get if those are uncorrelated, then you will be able to basically get a smoother curve. Okay, means कि जो उसका calmer होगा might be better, 9-10 के आसपास भी हो सकता है, if we talk numbers, ठीक है, बस like this, and then volatility of your basically जो भी अपना PNL रहता है. Yeah.
Thanks, Yash. Rahulji, you can go now.
Yeah, I have one request. Why don't you add weekly, next week options on AlgoTest?
Sir, कर लेंगे. Thanks. This is something that we've received from other people as well. At some point, we'll get on it. Good way to get the point across. We'll move on to Dharm87. You have a question?
Yes. Yeah. Hi everyone. So I'm new to Algo trading and currently trying to build a basket of strategies. And I come to know about this. So I was not aware of uncorrelated strategies, and now while testing my strategies on AlgoTest, I came to know about this number called uncorrelation ratio or number. So just wanted to know what that is and how it is calculated, and what could be a good number to look for, like whether it's 0.3 or something like this.
So yeah, again, there is no like hard and fast rule. There is no correct answer as to what is my cutoff for my correlation coefficient for me to say that this strategy is or like these 2 strategies or these 2 time series are uncorrelated. Naturally, the theoretical definition says that something can be perfectly correlated if the correlation coefficient is 1. Something can be perfectly uncorrelated if the coefficient correlation is -1, and your correlation coefficient hovers between these 2. This is the range between -1 to 1, right? Now, we do show a correlation coefficient when you backtest a portfolio of strategies, and what you have to understand is that this is also it is also something that is calculated on historical data, but it can change over time. This correlation coefficient is also it's also a random variable. Historically, something that was or a few strategies that were uncorrelated may become correlated in the future depending on what happens in the markets. And funnily enough, when we came up with this, when we released this portfolio feature, and this was a pretty highly requested feature from our users, when we came up with this feature, the first thing that I tweeted from my personal handle was that this is not something that is guaranteed to stick around. Correlations in the past have historically been broken in finance all the time. In fact, if you look at some of the top trading blow-ups in the history of trading, one of the biggest blow-ups was the LTCM scandal, which happened in the 90s, where a massive hedge fund called LTCM took a huge overly leveraged betting that the correlation between, if I remember correctly, the 29-year bond and the 30-year bond, that they will continue to remain correlated, and the correlations historically were 95%. So on AlgoTest that would seem like a 0.95. So what they did was they bought one bond, which was the 29-year bond, and sold the other bond, which was the 30-year bond, and the correlation of this position became -1, right? Or close to -1, where they said that it's perfectly uncorrelated. But the crazy thing here was that if that correlation came down to something like a 0.9 or a 0.85 in the future, they would lose a lot of money. And funnily enough, that's what happened. The correlation went down to 0.8 because of some crisis that happened in the market. I forget what it was, and it just caused like this crazy unwinding of positions, and literally the Federal Reserve in the US had to call a meeting with the 5 big banks over there to try and bail out this hedge fund. So the correlation coefficient is something good for you to take a look at, but again, this is something that can change, and correlations break. This is what it's called. In double quotes, we say correlations break all the time in finance when things go wrong. And when things go wrong, that's when, so in your case, in our case, what mistake we saw a lot of people doing is they were all building option selling strategies. They were selling them at different times, and because of the historical nature of selling these straddles in different times, one at 9:30, one at 10:20, one at 11 a.m. There was a sort of uncorrelation between these different strategies. But what happened during the Ukraine crisis was exactly what we say, that correlation broke down, where at the end of the day, when you're selling a straddle, you're taking a short vol position, and in times of market uncertainty, volatility goes up. So all your short vol positions, which are negative Vega, got hit, and all of them lost money. And then all of a sudden, that historical correlation, which was 0.2 or 0.1, it became 1. The correlation essentially became 1. So the correlation is also something that is not going to always stay the same. So you should, like everything else in trading, you should think very carefully about using these parameters in guiding your decision making, because these parameters are random. Everything can change.
This is going to be the last question. Jigar sir, you can go.
Can I ask a question about, I see a lot of questions about hedge funds and portfolio, I think. Can I ask a question about Bank Nifty options trading over here?
Yes, definitely. Go ahead.
Okay. I've recently started a couple of months back trading in expiry of Bank Nifty options, and I usually go for triangles and straddles, but mostly straddles. Now, I've learned a lot of adjustments. I'm trying in and out on a day-to-day basis. But the one place that I'm getting stuck is that when I'm managing a straddle and the delta of the in the money option goes beyond 80 to 85, 75 to 80. I know it doesn't make much sense to hold on to that option, but then what kind of adjustments can really help us manage that position? Either hedging with futures or with in the money options, or what exactly? And a second part of the question I would like to ask is that overall, in shorting options, what is exactly the basic risk management framework that one can follow actually? Because I do have a risk management framework in equities when I trade intraday, but I'm not really sure how to manage the risk in Bank Nifty options shorting. Thank you.
Yash, you wanna take a stab at this, bro?
Please pardon. Actually, dinner लग गया था. हाँ, बताइए. एक बार please, sorry.
Hello, should I repeat the question?
एक question repeat. एक question repeat करना है.
So one thing, I'm trading in Bank Nifty options for expiry trading since a couple of months. I've started with small quantity and gradually increasing it. One thing I'm getting stuck is that I mostly do straddles, and I know there are a lot of, it gives a lot of time value and delta coverage with regards to when the loss side option goes in the money. But I really get stuck a lot of times when the delta of the option goes is like 75, 80. What kind of adjustments can really help to manage that position? If sometimes if you've taken a position on Monday and in the next day itself the position goes over there, especially with this kind of market. So if you want to carry forward it to expiry or shift it to another straddle, what kind of adjustment can we make? And secondly, overall in trading in Bank Nifty options, what kind of risk management can we follow? I'm clear about the risk management in equities when I trade intraday, but I don't know exactly क्या follow करना चाहिए, how much of capital, whether it is percentage of capital base or the amount of premium that is received in Bank Nifty option. What exactly risk management framework did you guys suggest?
So, sir, पहले तो first वाला जो question है, okay, about key adjustments. See, I have put in this algorithmic trading or systematic trading. ठीक है, तो that I won't be saying. But second question is you are saying about the risk management. अच्छा, so when you say risk management, what do you mean in terms of about the capital or about in what way you were saying?
Correct. So, for example, if I'm trading in equities, we generally have a risk reward that we use to manage. We have a strict stop loss in the system that if I'm trading in a stock in intraday, I have, for example, 0.7% or 1% as a stop loss and 2% as a average, for example. So in terms of buying the options when we are trading, because there's a lot of probability that there's a lot of zigzag move in the market in buying Nifty. If you're carrying a position from Friday, from Monday to Thursday, there's a lot of ups and down movements. So what would be a good time to exit from one current position or maintain a stop loss? Whether it is percentage of capital or a certain percentage of the premium, like a risk reward ratio that we should maintain. And what time would suggest that we have to get out at a loss in this trade and then take another trade before the expiry?
Sir, this is also, how can I tell you yes, if the market is going to take a turn and then you can switch the position. Okay, you can have multiple strategies for your intraday or any kind of Thursday or any day, or the basis that if that strategy triggers a trade and the other one is taking the opposite trade, then automatically it will be hedged to automatically they will be hedged to each other. Okay, so that in that way, risk can be lowered down.
Right, but in terms of like for example, if you have 1 or 2% of the capital as a stop loss management for intraday trades and equities, is it feasible to follow such a kind of framework in starting equity options?
Sir, equity options I don't trade, so you can backtest a lot of things.
Pardon me, not equity options, index options.
So no, index options mein you are saying ki apart from stop loss, fixed stop loss, you want what other kind of things, right?
Yes, basically risk management कैसे exactly करना चाहिए, like in terms of percentage of capital or just the market move की basic framework for risk management in index options basically.
So when you say risk management, मेरे लिए तो सर मेरा max drawdown, okay, and एक दिन का पूरा जो मेरा RMS है personal, okay, that I consider as my risk, okay. So at any point in any day, if my whole portfolio gets to 3% loss, so I am shut for that day. So वो basically अभी तक हुआ नहीं है, but I am prepared कि max 3%. So here then execution comes into picture. I am answering this question from a systematic trading point of view. Okay, when you say risk management, so I am considering execution as a risk, and options. So obviously options का basically strategy के terms में that risk I am considering कि execution side में उसका कुछ अपना वो नहीं हुआ, stop loss या target or something is missed. So basis that अगर loss happens or something, so it's kind of this kind of thing.
Yeah, with regard to sorry, I'm just gonna interrupt here. Like the first part of their question with regards to adjustment, I think they had to first understand the option strategy that they are running is that what is the bet that they are making? Is the bet on delta, on trend, or is the bet that they are making on volatility? Based on what they said, the delta goes to 0.85 and then I have to figure out whether I need to adjust or not. That gives me a hint that they're probably trying to trade volatility and trying to figure out whether now that I started with a delta neutral position, I've accumulated a delta, what do I do with it? So this is again, like there's a lot of opinions on this, there's a lot of studies on this, on when if you are running a delta neutral short vol strategy, what is the optimal time to hedge? At what delta, what is the delta that I have accumulated now that I've accumulated a direction, the market is going against me. Now should I rebalance or should I wait? And again, this is not an easy question, but first there needs to be a bit of clarification around what are they actually trading? Are they trading vol? Are they putting on this non-directional bet, or are they trading direction?
Yep. Difficult to answer without knowing any further details. Like it is something that he might have a better chance of getting an answer if he sits one-on-one with anyone who's trading his style, and then only they can guide. But otherwise, we are all just guessing. So I don't think it makes sense.
Yeah. Same thing.
All right, guys. Thanks for joining us, and I'd really like to thank our guest speakers. Pawan, Yash, Vihan was there, Arshit was there for a bit. Thanks for sharing your thoughts on this topic, and I'm thank Raghav as well for sharing his thoughts and to the audience. And I hope the audience actually got a lot out of this conversation and discussion we had.
Yeah, certainly. Let us know, guys. Let us know if these conversations are helpful, if they're interesting, if they pique your interest. Let us know through Twitter, and we are happy to do this. Once a week, once every 2 weeks. We're happy to bring smart, experienced guests like Pawan and Yash to basically give gyan, I guess. But it's certainly valuable gyan, and we're more than happy to keep conducting these Twitter spaces. So thanks a lot, guys. Thanks again. Thanks, Pawan. Thanks, Yash. Thanks for all the insights.
Thanks.
Cheers, guys. Bye.
Thank you. Cheers.
Thanks, guys. Bye.